Zillow is unveiling a program where home buyers only need to put down 1% in order to purchase their home. That is huge. That right there is huge. And what I want to do today is I want to unpack this article because there's a lot here and I want to try to keep this video very concise. I want to give you my thoughts on what's going on here, why they're doing it. So you can see here's the headline. Zillow offers 1% down payment program. Here's how it works. Now, the last time I covered Zillow, it wasn't in a positive light. There was a whole lot of controversy about their flipping business. They were buying properties and flipping them. And there was a whole bunch of controversy about how they were acquiring the properties, how they were listing it, whole bunch of drama. They lost a lot of money. It was kind of a black eye. But I think this right here is going to be a great step in the right direction for Zillow. So now let's talk about the 1% down. Now, typically I did at least about 3 or 4 videos on this channel about what you should do as a first-time home buyer. Now, normally if you go to a lender and you're trying to buy a property and you're a first-time home buyer, typically they want to see 3 to 3.5% down in order to qualify for FHA homes, right? A lot of the first-time home buyers that I dealt with when I was a realtor, FHA was the loan programs that they went to, 3.5% down. That was pretty much standard. Now in this climate, in this economy, it's a lot more challenging to ask a young homeowner or prospective homeowner to come up with 3.5% down. The reason for that is, number one, interest rates across the board have skyrocketed, right? The home ownership interest rates, the mortgage rates over the last 24 months, I'll just put that on the screen, has gone up dramatically. This is making it much more expensive to buy a home than it was in the last several years. It's much more difficult. Rental prices, if you are renting right now and you've been renting for the last several years, you have noticed every year they have gone up in your rent, which means that the money that you would have had to keep in your pocket or to keep in your savings account to put towards your down payment, that money is going towards the increase in your rent, is going towards the increase in food prices. I saw a meme the other day and they were like, the McDonald's cheeseburger that used to be $1.30 is now like $3. All right. I don't know how accurate that is, but I believe it. Everything is going up in price. So all the opportunity where we could have saved and kind of skimped, put that money in our pocket to put down as a down payment, that money is being used up in so many other different ways that now your average prospective home buyer, they really don't have the same type of funds to put down. That's going to be a problem. That's going to be a problem. And that right there is stagnating the home ownership market. So this is what Zillow is trying to do. What they're going to do is they're only going to require you to put down 1% down. And then the Zillow mortgage group is going to come up with the remaining 2%. So now your 1% that you are bringing to the table and Zillow's bringing that 2%. You have now 3%, and that's usually what lenders want to see when they're looking for a down payment, right? So that's what they're trying to do right now. Hopefully this is going to stimulate more home purchases because it's going to allow more buyers to be able to get into the game, because one of the major hurdles and obstacles for first-time home buyers is that down payment. That's a huge hurdle. So now anytime we talk about these down payment assistance programs, I talked about NACA a few times on this channel. I talked about, I believe, Bank of America rolled out a down payment assistance program, and that was limited to certain markets. This one is going to be very similar. Matter of fact, if we zoom in here, it says, for now, home buyers can take advantage of this offering for properties in Arizona. So this is only going to be available if you are a resident of Arizona. Another thing is not every home that is listed in Arizona is going to be able to qualify for this down payment assistance program. So we're really going to have to see how many homes in Arizona is legitimately going to be available for this program, right? I don't know how many it's going to be. They didn't really tell us projections. We're just going to have to wait and see. But like I said at the top of the video, I do think this is going to be a strong step in the right direction. Hopefully this takes off. Hopefully this spreads in other markets because I think this is a good idea. All right, so now let me scroll down a little bit and I want to go over these few bullet points. So it says, what should buyers do before purchasing their first home according to Zillow? It wouldn't be right if I skipped over this because I have to go into the educational aspect, the psychology aspect of how to prepare yourself mentally if you're looking to be a first-time home buyer. So number one, understand your credit profile and try to improve your credit score. This is what we preach on this channel. We've been preaching this for years. Understand your credit profile. There's tons of content on this channel about how to pull your credit profile, whether it be Smart Credit, My FICO, annualcreditreport.com, how we need to look at it, things that are not right, things that are not accurate, how we can dispute it under FCRA, how to send out our dispute letters. It is your responsibility to make sure that you are keeping an eye out on your credit profile, on your credit reports. Anything that is inaccurate, you have the right under FCRA to challenge it, dispute it, get that removed to make sure your credit profile is as strong as possible. We talk about adding on primary trade lines, not authorized user trade lines. If you've been watching me for a while, you know I've been kind of, beating my hand on the desk talking about AUs. AUs is not the same thing as primary trade lines. It's because of videos like this, right? I want you guys who are watching, I know there's a whole different range of people who view this channel, but I've talked to a lot of people that are younger that are trying to be first-time home buyers. I want to make sure when you're in the trenches and you're trying to build up your credit reports and your credit profile, that you're adding strong primary trade lines and you're letting it age. Well, that way, when you get on the phone with these lenders, you're going to be so far advanced that these lenders are going to be like, well, dang, I've never seen anything like this. Because most lenders, when they're dealing with first-time home buyers, they've got to be part-time credit repair people at the same time because they have to teach the consumer what's on the credit report, what to dispute, how to get a secured card, the very basics, the very fundamentals. I want us to be able to do that well before we even think about buying a home. That way, when it's time to buy, it's going to be easy. It's going to be cake, right? Number 2, avoid closing accounts because these accounts will continue to show up on your credit report. Now, I did a video last month, right? And some of y'all clowned me because I did a little bit of a clickbait. I put, I think, a Navy Federal in my thumbnail, but it was actually one of my other accounts. But I did something that I always tell you guys you need to do, which is if you have a revolving credit card, I want you guys to put usage on it, put spend on it. If you aren't putting spend on your credit cards, on your revolving credit cards, the bank can and will close them down, right? And I went through a whole breakdown of when that revolving credit card gets removed or closed on your credit profile, how it can negatively impact your 3-digit FICO score and your credit profile because it's going to change the utilization. It's going to change the fact that you're no longer going to get positive payment history every single month. But you can see here, this is what the lenders from Zillow is basically telling you to do. Don't close down those credit cards. Don't close down those revolving accounts because the longer that they report on your credit profile, I don't care if it's a great credit card or a crappy credit card or if it doesn't give you bonuses or rewards. If you had a credit card for 2, 3, 4, 5 years, that's valuable. Number 3, avoid financing large purchases such as a car until after closing on a home. This will impact your DTI or your debt to income ratio. Now, this is something that I did not on this channel, but I did a collab with somebody else and I'm waiting for it to go live so I can tell you guys to go watch it. I'm actually very proud of that collab. But we were talking about the difference between the Navy Fed pledge loan and other type of credit builder type of installment plans like Credit Strong. And I think we mentioned a couple of other ones. And one of the things that I said that I really loved about Navy Federal when you do the Navy Federal pledge loan hack to pay down your loan 95% within like the first week or the first month. That way you have an installment loan from Navy Federal. You only have about a 5 or 10% balance remaining. So the DTI, the debt to income ratio, is not going to impact you compared to something like that $20,000 installment loan from a Credit Strong. It's going to show and it's going to look like you took out a loan for $20,000 from a bank. And now if a lender looks at your credit report and they see one person has one Navy Federal pledge loan that has been paid down 95%, that looks good. That looks like you did your job. You're not really high risk. Somebody else who's in a similar position, if they have an outstanding $20,000 installment loan, the lender is going to be scared. The bottom line is banks don't want to see a whole lot of debt. If you have a whole lot of debt prior to getting your pre-qualification letter, you're not going to get the same amount of home that you could previously qualify for if you kept your debts low. Until you get the pre-approval letter, until you close on the home, after that, then spend whatever you got to spend on, right? And then lastly, determine what affordability looks like after getting a good understanding of the credit report. It's important for buyers to understand how much they can afford. This is something that you can probably discuss with your lender. Again, your DTI is going to be something that's huge. Your 3-digit FICO score is very important, but your debt to income ratio is, if not even more important, because it's really going to decide how much home can you buy? And in this market with interest rates as high as they are right now, you can't afford to be lowering how much you can actually afford on a home. You want to keep your options as high as possible. So this is it. This is what is the latest from Zillow. Again, they are offering this 1% down payment for Arizona residents, and not all of the listings that are in Arizona is going to qualify for this particular program. But I want you guys just to be aware of it. If you do live in Arizona, I want you to just keep this in the back of your head. And as I always say with all of these type of programs, whether it be NACA, whether it be the Zillow program or the Bank of America program, these type of programs are good, but there's always stipulations. There's always red tape. Sometimes these programs may take quite a long time to close compared to your traditional, 3.5% FHA loan or even your conventional loans. So these type of programs, again, they're good, but they're not perfect. So I don't want you to look at this as some magical program where if you live in Arizona, you can just walk in with crappy credit and think that Zillow is going to wave a magic wand and you're going to be in the home. You still got to do the fundamentals. You still got to do the basics. That's what we discuss on this channel. So guys, if you like that information, make sure that you are subscribing. You are hitting the bell notification to make sure you are staying on top of all the videos that we're going to drop. I also have another announcement in September, probably the middle of September. I'm going to be launching a group in Facebook, which is going to be our inner circle. For my consultation clients that have got me on the phone, you probably heard me mention this a few times. We're officially launching. So it's basically going to be everything that you've been seeing on YouTube, all the courses that I've launched before. I have a 3-hour first-time homebuyer course that's recorded and ready to go. That's going to be in this private group. Guys, make sure you are locked in. Make sure you are subscribed. And aside from that, go down to the comments. Let me know your thoughts, and I'm going to check you guys out in the next video. All right? Have a good one. Peace.